Welcome once again to Economic Preppers, where we're getting ready and being prepared but not scared. As usual, I'm joined by my guests, Patrick and Dylan, but we have a special guest today, Jack from Nobody Special Finance. Jack, how you doing today?
I'm doing great, Jeff. Thank you for having me on.
Oh, it's my pleasure. Finally, I've been following your channel for a while. We've chatted before. We've talked on Discord. Finally, we talk a little bit one-on-one. We'll meet eventually at one of these events and symposiums and whatnot that Patrick keeps going to. But great to have you here. We got lots to talk about as always. Dylan and Patrick, I'm just going to jump right into it because we have so much to talk about. So let me share first a little bit about Jack so people can know about Jack. And let me make sure. Here we go. There we go. So Jack is available as we're scrolling down the bottom, as I'm now up at the top of the screen. But Jack is available at JG_Nuke on Twitter. So please follow him there, and also, of course, at Nobody Special Finance on YouTube. So those are the two places to find Jack. But our first story that we're going to talk about is we're going to stick with international news. I know Jack likes to talk about China and Japan, and Jack, you can go any macro
we showed his
direction
video
you like.
last week with Financial Prepper, right? So we actually highlighted your video with Financial Prepper of you talking about China. That was interesting information about the treasuries you talked about too.
Yeah, why don't we could start right there. I mean, because I didn't pull that one up, but I mean, Jack, why don't you just tell our viewers a little bit about what you feel is going on with China and how that's going to come back to the United States?
So China is in the midst of a debt bubble every bit as bad as we have here in the States, arguably worse. Now, it was all the rage in 2021. I don't know if you guys remember the Evergrande story, the story about the ghost cities that have been built in China. Well, that story didn't die. It's still out there. It's not getting the headlines anymore, but it's kind of been swept under the rug because the PBOC, the People's Bank of China, which is their Fed, has flooded their market with liquidity. They're printing yuan, and they're supporting their debt market by buying up troubled assets, much the same way the Fed has done quantitative easing here in the States. So that story's kind of on hold. It's not gone, it's not dead, it's just on hold. They still have entire cities that are empty that nobody wants to live in. You still have near universal home ownership in China. Almost everybody in the country owns their own home. And yet there are millions of homes that nobody lives in. So simple math, right? If you already have, say, 90% home ownership, and then you have 65 million vacant apartments in the country, well, who do you rent those apartments out to? Nobody left, right? So these apartments, they're all sitting there empty. They have owners. They have massive mortgages on them, but nobody lives in them. So they're not cash flowing. There's no rental income if there's nobody to rent in them. They have no utility. There's nobody living in them. So what do they even exist for? It's a speculative bubble. And because numbers go up, China just continuously built and built and built because somebody would always show up ready to buy it. Up until
because they really wanted a wife.
Yeah. Well, that's a great point. That's really where it's rooted in now. Not just a speculative bubble, not just a place to live, but it's gotten to the point where because of the one-child policy, you have such a massive imbalance between men and women in China right now. Unfortunately, it looks like a lot of the stories we heard as kids were true about things that were done to little girls or selective abortions. People really wanted sons, and the one-child policy was instituted. So now you're left with, I forget the number, I think it was somewhere around 34 million more men than women in China, which is pretty close to about the population of California. All right. Now imagine the whole state of California, but it's nothing but single dudes. No hope of marriage, no hope of kids, no future. What do you think that's going to look like after a couple of years? Probably not somewhere you'd ever care to be. All right. And so the ladies can afford to be choosy there. Well, if you don't have money, you're not getting married if you're a guy in China. And so what's the best way to demonstrate your wealth? By showing that you own property, that you've got your house, that you've got an investment property. So it's kind of taken on the life of its own where now, just for the sake of ever having a future generation, the whole family pools their assets together just so little Jack has a chance to buy a house and get married, and maybe we'll have some grandkids. Well, now the value of this home is not based on the supply and demand of homes. It's not based on the need of somebody to live there. It's not even based on reckless speculation. It's desperation for a future. So, I mean, this is like the bubble within the bubble within the bubble, what's going on in China. And it started to unwind when China rolled out this three red lines policies. Like all draconian central governments, they realized way too late the problem that they had created. They dragged their feet with the solution, and they rolled out this three red lines policy. It was like in 2020. And it was basically limitations on the amount of debt these real estate development companies could take out. And one by one, they started to fall in 2021 because of this three red lines policy. Well, they've realized that there's really no way to slowly deflate a housing bubble. Famous people have tried, Ben Bernanke, Alan Greenspan. So the bubble was about to pop, so they turned on their money printers. They started supporting their bond market, and they did it at a time when the rest of the world was tightening monetary policy while the rest of the world was raising interest rates and destroying money. So it's kind of created this unique situation in China, and Japan is somewhat in this boat also, where they're loosening while the rest of the world is tightening. So it's creating capital flight. Money is trying to leave China like never before. That's one of the reasons why China has cracked down on cryptocurrency and Bitcoin, although that's just for the plebs. You know, the wealthy CCP guys, they can still get to Bitcoin and get their money out of the country. It's just, you know, John and Jane Q can't. But it's also caused China to start dumping their dollars, because as they've been flooding the market with yuan to support their housing markets, causing inflation predictably. So in order to defend their currency against other currencies, China has a lot of dollars, right? They're the second biggest holder of U.S. treasuries in the world. At the start of this year, they had about $900 billion in U.S. treasuries. They're selling those in order to get dollars, in order to sell the dollars to buy their own currency. So they're both flooding the market with their own currency at the same time they're propping up its value. And that's wreaking havoc in the U.S. markets, because it's adding selling pressure to our U.S. treasuries at a time where the Fed is already raising interest rates, where we already have worries about liquidity. So it's adding to upward pressure on interest rates here in the States. Japan doing something very similar. So it's all leading into a liquidity crisis in our banking system.
Yeah, I think you mentioned that earlier today on your show with Mish, where you were talking about a couple of, I think it was a couple of banks that were highlighting how to buy treasuries and short-term notes. And that's where, like, you know, with people, the U.S. doesn't want to be the buyer last resort, kind of what England did a couple of months back to defend their currencies, but yet they're going to be in that position. They're trying to enable their citizens to use their dollars and to add more velocity to the economy and have them buy the T-bills instead, right?
Yeah, anytime I see CNBC and Bloomberg and they're trying to talk about how, oh, these short-term treasuries are such a great opportunity, here's how you can invest. Whenever I see something being shopped to retail traders so aggressively by the mainstream financial press, it always makes the hair on the back of my neck stand up. It's like something doesn't smell right about that.
Yeah, usually followed by a commercial for commemorative coins. But yeah, I think that there's a lot going on with Asia. This is why you have to pay attention to the dollar is so prevalent across the globe. The world economies are all intertwined so much, especially the Western world, the ones that are tied to the dollar so much. But it makes sense that they're selling dollar denoted vehicles because the dollar is high. I mean, we talk about that on the show a lot. Patrick brings it up a lot about looking at the Dixie. The Dixie is at 105 today. It's very high. So it would make sense. Any smart investor would say, sell your assets when they're high and buy things when they're low. So you'd sell dollars to buy yuan or yen or whatever currency you're trying to defend. Patrick, you agreeing?
I agree, dude, for sure. Because what we know is happening is, Heresy says this a lot. We all know Joe Brown from Heresy, and you guys know I like to talk about my favorite influencers, but he'll say it in a very simple way. When money is abundant, it doesn't cost as much to get it. When money is less abundant, it costs us more money to get it. So this is all they're doing. Fed Powell knows this. I mean, I would hate to even speak. Jack, I want you to talk, because I know, when you say, Patrick, that's a great point that you brought up about the kids. I should have known. I took notes when I was sitting in your class at the Silver Symposium. You talked about it. You presented on it. That's why it's a great point, because you brought it up. So let me step back. I could talk about this all day, but I want to hear a different perspective from Jack.
I just wrapped up filming a video today. It's going to come out tomorrow about exactly that, money getting scarce. And it's happening right now for the first time in modern history, money supply is shrinking in the United States. It just came out, the M2 money supply, which is all the paper cash in circulation plus checking accounts, savings accounts, and CDs, certificate of deposits. M2 money supply. This chart is now down 2% over the last year. And that is the first time since 1929 that M2 money supply has been in contraction. Now, you may recall 1929,
There was
rather
like 4
doo-doo
times,
of a
right?
year. Yeah. But actually, I mean, I think it was like 1929, 30, and 31. We had negative growth in the money supply. Now, this chart you just brought up, that was really quick, Jeff, by the way. Kudos, that was pretty fast. You see that little tail down right at the very end there, that little dip. That's all the quantitative easing that the Fed has done since March of last year is when they started. And you'll see this chart only goes back to about 1959, I think. There has been no declines in money supply in modern history. Not during the GFC, not even during the dot-com bubble. The money supply grew all through those crises. So we're in uncharted territory here with the money supply contracting. All right, now we're still talking about inflation right now. We got some hotter inflation in January. It kind of surprised a lot of people. The Fed is worried about entrenched inflation. We're going to be talking about deflation very soon. And deflation strikes the same way inflation does, through the Cantillon effect in a very particular sequence of events. First in asset prices, then in consumer prices, and then in wages. Right.
So
right
say that
now,
one more time. I want our listeners to really hear that again. Say that again. It goes like this.
Yeah, it's called the Cantillon effect, right? And it was first observed by Hayek, one of the fathers of Austrian economics. He observed that when you pour honey in a cup, it doesn't flatten out right away. It tends to stack up in the middle, and it takes a while to spread out and lay flat. Eventually, it flattens out, but first it stacks up in the middle. And when you dump money into the financial system, it does the same thing. First, it stacks up in the middle, and then by the middle, it means in assets. It stacks up among the wealthy. It inflates housing bubbles. It inflates stock bubbles, crypto bubbles, right? We dumped all this money into this system, and through zero interest rate policy of the entire last decade, we also pumped money into the financial system. And so that money first flowed into asset prices, and that's why we are in the everything bubble right now. Now, the next place the money flows to is into consumer prices. As assets are bid up, now the price of consumer products starts to go up. Now, energy is getting more expensive. Food is getting more expensive. Stuff on the shelf is going up in price. That's the inflation, the CPI readings we've been seeing for the last year. The very last thing that we see with inflation is wages rise, but not until the rich have already gotten richer through the asset inflation, not until the poor have gotten poorer through the consumer price inflation, and then finally the wages rise, and that's when the playing field levels off at least a little bit. The middle class finally catches a break. The poor get a little bit of a raise, so now they can afford the higher cost of consumer products. Now, the problem is we have this central bank that steps in every time, and they sit there during phase one, and they get rich, right? They all bought stocks. Then August of 2021, to eliminate the appearance of a conflict of interest, they all sold their stocks because they knew consumer inflation was coming and they were going to have to start fighting it soon. So Fed governors all got rich. They all sold their stocks. And now that life has gotten more expensive for the middle class and the poor, now they want to slam on the brakes. Now they need to stop the Cantillon effect before it allows wages to rise because they're worried about wage spiral inflation, which is this boogeyman in the closet that does not exist, and yet we're told all the time we need to fight this boogeyman. We need to burn down the house because there could be a boogeyman in the closet. That's what they're doing with the economy right now. Wage spiral inflation, that's one of the tenets of Keynesian economics, where if people make more money, they will spend more money, and therefore we'll get more inflation. Well, that might be true in theory, but right now, if people make more money, it just means they can afford what they were buying last year anyway. So it's not like it's going to lead to more shortages of goods if we just give people a break and give them the raises they're demanding.
Yeah, and
there's
so many things I wanted to touch on there. And Dale, I'm going to throw it to you in a second, but there's so many things I wanted to talk about there. And I know we're going to talk about banks and banking in a little while, but when you start talking about the Cantillon effect, and there's so much that I've talked about that as well, and I just want to share this story as well that we talk about this too. But minimum wage keeps going up. Like people are getting more, like they're the last people to get the money, as you're saying. But what I'm kind of hinting on, this is a topic that's really near and dear to Dylan, which I'll let Jack and Dylan discuss this. But I think that this could lead to, with the money supply tapering off and coming down, the M2, as you show the graph, and what the crisis that could be emerging that many people were talking about before May, June, July, is this going to be the launching point to say, well, we don't have enough money in circulation, velocity shrunk down, maybe we should launch CBDCs now, and that'll be our savior. Do you see that as being a potential, Jack?
Oh, yeah. First, you create the crisis, and then you offer up the solution that was your goal all along, the CBDC. Absolutely.
Yeah. So I know we've had a couple countries launch CBDCs. Dylan, I know you're tight with this stuff. And what do you think is going to happen? Like, do you see this as being one of the top potential launching points for CBDCs the next couple of months? I mean, June's not that far away.
Yeah, that's close. I know we've been talking about CBDCs and that they're coming. We've been talking about that for months since we started this show. If they have a good crisis and they can manufacture that crisis to create opportunities for them to get more control and more resources and harness those, all while disguising it as a benefit or a plus for the everyday person, they're totally going to do that. And I guess the big thing for CBDCs that I see is, how they're going to go about doing it. And this would be a good discussion to talk about and reflect on, is what that will actually look like. Because I think it's not necessarily a simple rollout, but they got to use a lot of strategies to bring people on board for those, that they're going to take different shapes, and they're going to disguise themselves as benefits. They're going to make these things sound amazing to get you on board with them. And that's something to really look out for.
Think about what a CBDC is. What are they really offering us with a CBDC? So what? Instant transfers, ACH transfers that are instantaneous instead of taking 3 days? Well, gee, if only we had some technology or some form of transacting instantaneously already at our disposal. What's that on your hat, Dylan?
Yeah.
If only we already had, if only that technology existed.
If only.
So really, what is it that they're offering us with the CBDC? This grand scan, it's going to be so great. What, computers that work on the weekend? Is that what we get? Gee, thanks, government. Keep up the awesome work. You guys are amazing. They're offering us nothing.
I think what they're going to spin it as is probably extra currency and just airdrop people extra money, like another stimulus package.
Yep. Stimmies. That's how they'll get us to do it. They'll say,
exactly,
here's another $600. Forget the fact that it's coming out of your existing savings, which apparently they were able to get that by us in 2021. And we still have half the country who thinks inflation is a greed problem and not caused by the helicopter money. There's still people who think that way, like greed was invented in 2021. Wow, greed has come a long way in its 2-year history. But no, they'll use stimmies to get it by us. And the thing is, stimmies works both ways. If they're able to give us money directly into our Fed wallet, they'll also be able to take money away from us directly from our Fed wallet. And don't think they haven't thought about this already. A gal by the name of Soleil Amarova, she was President Biden's nominee to be the controller of the currency. She's a full-fledged card-carrying Soviet-era communist. And she specifically said that they would use CBDCs to directly credit or debit people's accounts in order to control inflation, i.e., instead of the current quantitative tightening, the way the Fed is destroying money, they're letting government treasuries mature, they get paid back from the government, and they're just deleting the money from existence. Instead of doing that, they'll just reach into your checking account and your money. Just delete it. It's gone. There she is. That's Soleil Amarova. She graduated. What was the university she went through?
Cornell Law. Cornell.
I mean, she was like the Karl Marx, the Lenin Award winner. I mean, she reads like Karl Marx's resume. And some of the things she was saying, she withdrew her not from consideration for controller of the currency, but she was fully behind the weaponization of government and regulations in order to implement their social ideology. And you cannot give a person like that control over everybody's money. Don't think they won't mess with you. They will. They think they're doing the right thing. They're convinced of their righteousness. And A
Well,
lot of people have
going
done a
back
lot of awful things.
Well, going back to that, Jack, and the Cantillon effect and everything that's happening, do you see that there's a potential here that the banks get these CBDCs first, and maybe we'll talk crypto in a little bit because we are crypto guys, and we definitely want to talk about when Dylan gets he's got a connection issue. But when we come back and talk Bitcoin, I mean, are the banks are going to be able to custody Bitcoin now? Are they going to get these new currencies, these CBDCs, and scoop up whatever they can and buy the assets that are out there first?
I'm sure they will, and the thing is, it's going to blow up in the bank's face because the banks are they're going to be all about it because they're going to get their short-term payday out of it, probably in a scenario very similar to how you described. They'll get early access, they'll get the stimmies right away, so they'll be able to buy up assets. But what the banks will eventually realize is that CBDCs will make them obsolete. We won't need banks anymore if we have CBDCs. All banks will be the Fed. It's going to be like Demolition Man, where all restaurants are Taco Bell now. Well, congratulations. Now all banks are Fed Bank. It will be a 100% takeover of the banking system by the Federal Reserve. I mean, why would you need to go to the bank and deposit money if you've got your Fed wallet, Bank of Banks? You know, so the existing banking system would be completely flipped on its head.
Well, speaking of the existing banking, let's get back to some of the articles we were talking about earlier. I mean, we've got two articles that came out just this week on Zero Hedge about Credit Suisse. They've been talking about their issues, that they're crashing, their prices going down. They have their main depositors, the main holders of their stock are dumping it on the market. They're abandoning hope. They're questioning the future of their franchise. Could a bank failure be on the tipping point? Could that be happening in the next few months, and could that be another vector for launching a crisis and then launching the CBDCs?
Talk about setting him up for an easy question. Like,
Yeah, you're
I
teeing me
watch
right
your
up
shows.
there.
I know you got this so good. Go for it.
When are we airing this? We're airing this
just the
tomorrow
host.
sometime?
I'm just the host. I tee him up. I'm a softball pitcher. What do you want?
By
Yeah.
the time this video sees the light of day, we might already be talking about that. All right.
It's happening now.
Yeah. I mean, every bank in the United States was down 5% today. I mean, there
Some
was
down
crickets about it.
60%.
There's crickets about it in the press. I was looking at the charts today.
Shocking.
I saw the indexes were down. I knew about Silvergate. I knew about Credit Suisse. I saw the story this morning about Silicon Valley Bank. And then all of a sudden this morning, I look up and I'm like, whoa, JP Morgan down 5%. What happened to JP Morgan? Nothing. Bank of America's down 5%. Wells Fargo's down 5%. Everybody, what's going on?
And
Turn
they're
on
not letting
CNBC.
some
All
people
they're talking
open up
about-
accounts either.
What's that?
They're not letting some people open up Chase accounts either.
I hadn't heard that one. Phew.
I'm having issues with this particular bank, but I'm fixing that.
When I started my corporate account for my YouTube channel, Chase gave me a hard time too. It's the KYC laws. It's a pain in the butt.
They're all pain in the butt anymore.
Yeah.
Well, I love my local Chase banker. Amy is wonderful. Thank you, Amy, if you're watching. I appreciate you for all the help you facilitate with me and my coin acquisitions because I love collecting silver coins.
Thank you, Amy. Amy, good things happening at Chase with Amy in charge.
Well,
All
she
right.
doesn't give me a problem, so Jeff, I'll take you in and show you how the ropes work in Albany.
Okay.
Well, if this situation with Jamie Dimon, if he gets roped into the Epstein Island thing, maybe Amy can take over in the C-suite for Jamie Dimon.
I don't think
maybe
any
she'll
love will
make
be
the whole
lost.
banking industry ethical again. Fat chance, sir.
Yeah.
Not while they're trying to take our Bitcoin. That's the whole point of having Bitcoin. It's like saying, hey, I really want to grab some precious silver, and then I'm going to take it and I'm going to give it to the bank to hold.
I like
Yeah.
it,
That's the
shiny.
most insane thing in the whole world.
Yeah,
So-
I know that Jack's had some issues lately with YouTube, but I know that one of the things that you recently talked about was bail-ins, and that would be another good thing. It could, if we're talking about the bank taking your crypto, could this be? I mean, there's the video bail-ins explained. I know I did one as well a way back, but bail-ins are not bailouts, and I think that our listeners would really benefit from hearing it. 60 seconds of what a bail-in is, Jack, and then we can talk about a little bit of the finite details and how to protect people.
So a bail-in is how a failing bank is rescued. And because the bailouts were very unpopular, nobody liked the idea of taxpayer money going to reward bad decisions by bankers, self-included. I didn't like that idea. So now, instead of taking the money from the taxpayers, they take the money from the depositors. Well, that's us. That's still us, isn't it? The depositors, the people with money at the bank. So if you have under $250,000 in your bank account, you're probably safe because the FDIC insurance covers your account. But a bail-in basically means a haircut from depositors. When you put money into the bank, you're making a loan to the bank, right? You are an unsecured creditor of that bank. And so what happens is the bank says, well, instead of this IOU, instead of giving you back your money, we're going to give you stock in our bank. Congratulations, boss. You're now a stockholder in our bank. And it's like, well, I don't want to own shares in your failing bank. Well, it's not up to you. It's the law now. It was passed under Dodd-Frank. Basically, people who deposit money in banks are last in line to be paid back. Derivatives get paid back. Bondholders get paid back first. Company benefits get paid first. The last people to get paid will be the people who have accounts at the bank. And it's basically anything above the threshold for FDIC insurance, you're going to lose a portion or all of that. And the FDIC insurance cutoff is $250,000. So,
Jeff, I had a question for you. If I remember correctly, you did a video on this a little bit ago. Wasn't there like some kind of limit or cap that like some amount where you used to have to be a big of a bank to qualify?
It was so long ago that I was in Myrtle Beach back then. But
I believe it's 50 billion. I believe it's 50 billion in assets. Makes it basically the GSIB banks. Now, there are other requirements, other statutes that govern things like credit unions, small local banks, but they're all kind of set up to mirror the FDIC insurance. The numbers and the thresholds may differ a little bit, but they all kind of mirror the same setup. So when I say bail-ins, I'm referring to the GSIB banks, the big outfits. You probably get a similar result with a failure at a smaller credit union or a smaller local bank.
Yeah, that video wasn't freezing well, but yeah, 50 billion is the line. And I did do a little bit of homework. Let me share that screen again. And it's about 50 banks or so that are at this asset. The MX blog talks about both the credit unions and the banks. And you're looking for that 50 billion line. And they have a good list of them here. It's about 50 banks or so. What I like to say is that it's a regional bank, or if it's a bank big enough to have a name on a stadium, that's pretty much the banks that you want to be concerned about. A couple of the larger banks that are also credit unions, like Navy Federal Credit Union is the top credit union in the country, and that's over the 50 billion line. So that would be another concern. But a weird thing that I noticed when I was opening up credit, I'm always talking to banks because we're doing homework, right? So I've talked to several credit unions, and I found that a pattern emerged that the credit unions didn't use Zelle. So I thought that's another indicator that they're not networked with the other guys. So if you go to a bank that's not on Zelle, that could be a positive indicator. Not financial advice, not certain that that's true, but you might want to think about that if you hear that. So
I had never heard that. That's interesting. What is it about Zelly that the credit unions won't touch it? Is it Zelle or Zelly? I always say Zelly.
I think it's Zelle.
Yeah,
Dylan, you're more hip than us. What do your friends call it?
They call it Zelle, but you can call it whatever.
Zelle.
Whatever you want.
Yeah,
Zelly.
I don't use whatever.
I thought it was telling when there was a commercial, I think a couple of months ago, where there were two guys in the kitchen and one guy was trying to give him $100 and he was going to give him cash. And the guy said, no. I'll Zelle it to me in my bank account. Basically saying, he didn't want the cash. So you alienated cash. You promoted banks. You promoted keeping money in the banks. All in 1 commercial. But I think it went past most people on like people like us would catch it right away. But I'm like, here they are subverting and just saying, you don't want cash. You want to keep it all digital. Keep it in the banking system. No problems to see here. Keep moving along.
Oh, they definitely don't want people using cash. Right? I mean, that was one of the things that like sealed the deal for Lori Lightfoot, the former or soon to be former mayor of Chicago. She said something about, hey, your city's a war zone, and the guy who runs a hot dog stand can't do business in downtown Chicago because he gets robbed every 5 minutes. She said, well, maybe he shouldn't use cash. Maybe he should just take electronic payment, and then he won't get robbed anymore. Wow. Talk about a gaslight. I mean, Have
you seen that movie, They Live?
I have.
The glasses that they put on, right? Like where you get to see everything clear and you like see all the hidden messages. It's like, I just saw that movie yesterday for the first time, and a good friend of mine said, hey, you got to watch this. And I watched it, and I mean, it was old, right? But now when I watched it, it was It's like what's happening to my whole life right now is Jeff put these freaking glasses on my face, and I can never unsee it. Thanks a
You know,
lot, Jeffrey.
1984 was not an instruction manual. I think our leadership these days needs to be reminded of that. They Live was not a how-to. It was not a DIY video. It was meant to be science fiction. Right? It was meant to be a cautionary tale. Don't let it get this bad. Whoops.
Yeah,
we let it
They
get.
Live, V
Was
for Vendetta, 1984, all these things that are out there. Even The Matrix.
V for Vendetta.
Wasn't
Wow.
it? Wasn't it? In the book Jackal Island, was at the end of that book where he talks about how they consulted or they used 1984 and dystopian scenarios or books like that to create game plans for how to take more control from the population, and
Yeah,
instead that it was a good idea.
just
I
look
mean,
at all the
that's-
dystopian things that have been the teenage books in the last 20, 30 years. Like you have like yeah, oh god, what was that one? Like Divergent, and then there was the one like the
Ooh, I love
Maze.
that whole series. Listened to read the whole book, watched the movies. I love that whole series.
And
I'm
then
Dauntless
was
for
it
sure.
oh man, I'm gonna blow the title. Was it Mockingjay? What was that one?
Hunger Games.
Are you
Hunger Games,
kidding
thank you.
me? Katniss Everdeen? You don't even.
I read all the books. I did read all the books. I thought they were very good, but clearly there was a lot of dystopia in all of cinema that they're just programming you and just putting you out in front, like just was it predictive programming is the phrase. We're not getting the woo section yet, but I mean this is clearly in your face that hey, all these movies are kind of telling you a tale that could very well turn out. Even the virus movies that are out there. So all these stuff that just all played out. Looking back, like that could never happen. But then look at go back 3 years and then go fast forward to today. What has happened in the last 3 years? It's insane.
Nothing.
So,
I'm still Team PETA. I'm always going to be Team PETA.
I mean, guys, it's the 2020s. Let's not say what can and can't happen. Let's not try to handicap what they would or wouldn't do. Right? It's the 2020s. It's like daring it to come true.
yeah. Well, speaking of some things that are coming true, and the numbers that Jack, that like you're always on the CPI and all the different numbers, and the numbers that are coming out. We've got Powell talking about another rate, but some of them are the numbers that have come out recently. They've been kind of contradictory, and this is what I really wanted to touch on. Is like I see all these stories about the job market, unemployment, but my question really is like, if all these jobs are out there to be filled, like they revised the one number, I think it was December. Patrick, was it last December? They
Yeah,
revised
Jack
like
knows all about it. Learn from his show too. Go ahead,
Yeah,
Jack.
so it's like a million jobs that were discovered or revised. First off, are these jobs, do they really exist? Who's filling them? What are they making? And are there even people to fill them, or did they all pass away due to some other conspiracy theory that we don't even need to get into?
I already got myself shadow banned. You guys you want me to take
We're
you down
trying-
this drain?
hey,
I'll take you
remember-
down this drain with me.
I'm a
We are
great
on
talker.
YouTube.
Let's
We're
go
on
for it.
BitChute. We're on Rumble. We understand that at any
All right.
moment it could all be like, okay, you
No,
can't
bro,
talk
we're gonna
about
hold
that.
the
but
front lines with you. You know, we'll make new channels too. We've got
Yeah.
4 of us right here. We can each make a channel, and I have a wife. She'll make a channel. We'll have backup channels on backup channels, and we'll just tweet out what channel to watch this day. Like, we're not going down. Have fun, guys.
Honey, get started on your YouTube channel. We need a backup. All right, I was telling the wife. So, strong jobs market. Short story, it is a lie. The strong jobs market is a lie. All right, and I'm going to, in the most brutally simple terms, negative real wage growth 23 months in a row. All right, the price of labor is falling relative to goods and services for almost 2 consecutive years. All right, things don't get cheaper when there are shortages of them. It's against the laws of economics. It just doesn't work that way. All right, so right away, just looking at negative real wage growth for 23 months in a row, almost 2 consecutive years, right away I can tell you this strong jobs market is baloney. It's not real. All right, if the jobs market was tight, if there was a shortage of labor, then the price of labor would be going up. Price of labor is not going up, or at least it's going up slower than the price of everything else. All right, so right away, easy to tell the strong jobs market is a lie. Now, you can tell a lie within the truth, or you can make the numbers say what you want them to say. The January report came out, the January jobs report, 517,000 new jobs created, all right? And, the economic plan is working and great. Okay, But look what's in that 517,000 jobs. They were almost all in leisure and hospitality. And all of these labor reports, all of these job gains, and all these job openings reports, the biggest category, it's always leisure and hospitality, right? It's baristas, it's waiters, it's busboys, it's bartenders, low wage service jobs. And look at the jobs where we're losing people. We're losing white collar. We're losing big tech. We're losing management. We're losing high paying jobs. All right. Yeah. So people are losing their full-time job at big tech and they're getting a job as a barista at Starbucks. That's not economic prosperity. That is desperation. Now, you're also seeing things like there's a big deviation, and this is something that Zero Hedge has done a fantastic job of covering, is the deviation between the households and the payrolls within the jobs reports. There's two different ways you can count jobs. You can count the household numbers, which is how many people are working, and then you can count the payrolls numbers, which means how many jobs have been filled. And what we're seeing is a big deviation. The households number is staying the same. The payrolls number is rising fast, which means people are working more than one job. People are getting second jobs because it's the only way they can afford the cost of inflation. Well, when a person works two jobs, that counts as a job added, even though the unemployment rate hasn't gone down at all. It hasn't changed that. And the other thing we're seeing within the jobs market is we still have not had workforce participation rate has still not recovered to pre-pandemic levels. Millions of people left the workforce and they have not come back in. Now, it could be a combination of boomers retiring, but then nobody aging into the workforce to replace them. Or my suspicion is it's a lot of people have just given up. They just said, life is a hamster wheel. I'm not playing. Screw it. I'll take the unemployment benefits and I'm not even going to try. And I've seen that among Gen Xers. I've seen that among millennials. I see it a lot among Gen Zers. They're just not going to try. It's just going to make some rich guy richer. And I'm a pretty hardworking guy, but I can't disagree with them, right? I look at, back to the Cantillon effect discussion about how we constantly do this financial repression. We make life more expensive. We make the rich richer, and then slam on the brakes right before you get a raise. Sorry, working class. Mm-hmm. And then, then we act surprised why both parents in the average household have to work full time to maintain the same standard of living that a single working parent household could have maintained in the 1970s. That doesn't happen overnight. That's 50 years of this cycle of inflate asset prices, inflate the cost of living, and then create an economic crisis right before the wages rise. And that's why the middle class has vanished in the U.S. over the last 50 years. And it's happening again now. The problem is both parents are already working. So now what do we do? There's no third parent unless you're like SBF's little polycule in the Bahamas. There's no third parent that you can bring into the workforce. So what do? I mean, are we going to have to put the kids to work? Is that how we're going to make ends meet now? No,
oh man, my head just went to like, what if Jack's wrong? What if there is a third parent? What if? Oh no, I don't want to.
Oh, trust me, it's the 2020s again.
I know, that's what I'm like. That wouldn't even be such a far off thing to discuss, right? It's like, hey, polygamy is legal. My wife tells me about this show where this wives are all like 4 wives and a guy, and
Muslims. Utah is protected then. Okay.
Well, there's the third parent is the government, right? So you divorce, you become a single mother, you get all the benefits, you earn more. There's incentives where you can earn more as a single mother than being in a relationship, or and so that stuff's out there. So it's almost like you just have that, and then you don't like the baby daddy, you get someone else. And then you don't show them paying you money, and then you just collect benefits from the government. And there's that system out there, which is a whole disaster in itself.
And unfortunately, those payments from the government, most of these programs, and I'm not against these programs, right? I mean, hardship is real. People fall on hard times. There should be a safety net. There should be a support structure to help people along, and ideally to return them back to being productive members of society. That's where you want it to and ultimately lead to. But let's be honest, we're operating at $1.5 trillion a year deficit. So all of these programs are financed by government debt spending. Government debt spending is inflationary. Inflation makes the cost of living more. So it's a feedback loop. Mm-hmm. The solutions are making the problems worse. So
I remember one time you said something on your show, I'm pretty sure you said something like, it really sucks knowing that when your kid is born, this is what the life that they're born into, the kind of debt that they're born into. And you said something like, I know it's not popular, but it'd almost be better to default on our debt.
Oh, yeah.
Or something like that. You said you'd be willing to do even that for your kids. And that's one of the things that stuck out to me as a father. I could really relate to that. It's just so hard. Like, we have to do things, and when we talk about why we do this show, right? Why do we, again, why are you guys here? What are you doing here listening to our show? Why does it matter what us four think? I hope it's for the fact that you can understand something a little differently and make a change. Understand that if you have children, if you're a dad, if you can relate to me or Jeff or Jack, and you guys can be a father and say, man, this is like something I don't want to leave for my kids. You need to be thinking about what the impacts of our discussion means and how you can prepare. So, I want to call out to you guys, please like, comment, subscribe, share, tell us how you're preparing for your family, because if you are not making a change, how are you going to leave anything better for your kids? You know that they're born into a life of slavery, of debt. How are you going to set them up to succeed in this world coming to them?
Yeah, and I think everybody needs to learn about where these currencies come from, because they're created out of thin air. And like, as soon as that first dollar, like Mike Maloney explained, after the first dollar was made, it's a debt back to the treasury that made it. So or the Fed, and like, how are you going to pay it back? Well, you got to create another dollar. Now you owe that dollar back too. It's a spiral. It never can be satisfied. And we see it in things like, we see the personal savings rate being at an all-time low. Here's a graph that going back to comparable to the GFC era. The personal, like, it used to be in the 30% when they had stimmy money coming out just a couple of years ago. Now it's all gone. Also, personal credit is at a record high. Yeah. People are already working. We've talked about that just generationally from the 40s and 50s. You could have one guy working and supporting a big family. And then in the 70s and 80s, you had the equal rights, and now you had two people working. And then 20 years later, now they're all in debt, and now no one can afford anything. So it's just a never-ending spiral out of control. That's just gonna. We are at a point. I think Joe Brown has said it. Like, no country that when they've reached 150% debt to GDP ratio, they never recovered from that without revaluing their currency. So that's about where we're at on a global level, not just one country, a lot of them.
Yeah, and you touched on a couple of things in there, and you mentioned the one parent and then the two parents working. And a while ago, we talked about raising minimum wages. And, just consider this for a minute, right? You've already got both parents working, and let's rule out the third parent scenarios. Not judging, just not for me. I love my wife. She's all I can handle.
Me too. Amen.
Yep. So
yep.
What's left? Let's say you're a parent. Both parents are working their hands to the bone, and they're still not making it. And maybe you've got some teenage kids who now can enter the workforce. Well, what happens if those kids have no job skills, no experience, because they've never done anything before? I try to raise my kids to be employable adults, but let's say they're just starting out, but the minimum wage was just raised to, let's say by the time my kids are teenagers, it's $35 an hour. Well, my kid's skill set is not worth $35 an hour. Well, what is that minimum wage more than a ban on working for anybody whose skill set falls below that level? Now, I'm all for people making living wages. I am not against people making more money. See earlier discussion about let the wages rise, but let the market rise the wages. When the government comes in and says we are yanking up that minimum wage, what the government is really saying is anybody whose skill set, who is not capable of producing this much economic activity for an hour of work, is not allowed to work, because nobody's going to pay somebody more than their labor's worth. That's not how business works. Nobody's going to do that except the government. Well, they have their own printing press, right? McDonald's doesn't. Burger King doesn't. A little mom and pop bistro doesn't have that. So they're not going to hire anybody whose skill set is lower than the minimum wage. If they didn't have the minimum wage, maybe there's a kid who just wants to learn how to take direction from a boss, how to be an employable adult, and maybe they're only worth $10 an hour. Well, at the very least, that kid can be $10 an hour productive. That kid can at least go out and make a few dollars. I'm not talking about a grown man here. I can sense people jumping down my throat here. You're meant to aspire
this
to be more
reminds
than
me
a
of like
burger
work
flipper in
study
life.
programs in college where the government subsidizes your employment rate as a college student to be able to work for companies. So the company only pays you like $6 an hour, and the government paid like the extra $20 an hour. I remember that it was a part of college, so I could see that being connected too.
Well, I mean, the government was
bigger work
subsidizing you
study.
being in college to begin with through the student loan programs, which ultimately what it was is you were selling your future self into indentured servitude for the benefit of the people who worked at the college, right? I mean, college administrators, college football coaches, college professors, they make a pretty good living for the amount of hours that they work. And that all comes on the backs of students who sell themselves into servitude in order to get that college degree, which is not worth anywhere near what they're paying for it. Otherwise, we wouldn't be talking about student loan forgiveness right now, would we? The loans would pay for themselves. They're not good investments, and that's why we're talking about forgiving them.
Where were you 20 years ago, Jack?
I was chasing girls around.
I just looked it up.
I was a knucklehead 20 years ago.
I just looked it up. I remember that this is often thrown out there, but the Harvard endowment, just looking at those numbers, if you look at the endowment numbers of these big universities, Harvard's endowment is over $50 billion with a B. Okay, the whole first in your family to go to college and all those college loans and everything, it really was exactly what Jack said. Put everybody into a 4-year program to spend it to pay it off for the rest of their lives, and just that is one of the biggest parts of our budget is debt service on those student loans. It's a big contributor, and also to retirement plans, which people are counting on too. So all these different things can blow up in our face at any given time and cause that crisis event, which will give an opportunity for the government to come to the rescue and say, hey, here's your CBDC, let's airdrop it to you, and pay no attention to the fact that we can, cash is virtually gone and it's disease infested or whatever, and pay no attention to the fact that we can track all your transactions going forward.
And the really sinister thing about the CBDCs is that's how they'll control inflation, just by limiting consumption. They will put everything on an allowance. They'll ration it. They'll program your money so you're only allowed to buy 1 dozen eggs a week. Everybody's talking about egg prices are so high. I got my little chicken operation in my backyard. I love it. I've actually had people tell me they want to buy my eggs because they want to raise their own chicks, but they can't even get chickens now because so many people are getting backyard chickens. You can't buy chickens anymore. They're like all the websites that sell baby chicks, they're back ordered for months. So now I'm like, all right, I'm going to start incubating baby chicks and selling the chickens. Right?
Dude,
well, with
I
the
was going to tell
CBDC,
Jeff a story about that. This is not a lie. My wife will back you up. I've got pictures to prove it. I incubated baby chickens and ducks in a Bitcoin mining facility in Bend, Oregon. We were driving and we had to go to the mining facility. We plugged that incubator in, put it in there, and I hatched baby chickens and ducks in a Bitcoin mining facility.
all right, so we're going to get derivatives going. We are going to tokenize your baby chicks so you can buy a digital
We ate
claim
them a
against
long
those
time
baby
ago.
chicks, and then
They're
we'll sell
gone.
futures so you can buy the ones that haven't hatched yet. Yeah.
That sounds
whole
like
market
government
going.
stuff, bro. My wife would never let me do anything like that anymore.
We'll have $1
Well,
billion in circulation for every egg in the incubator.
Man, that
Leave
was
it
a
to
wild
Patrick.
drive. 3-hour drive with an egg incubator in the back of my Durango, hoping that it would just work, transitioning it over to the power in our facility. And I remember just going to check on the eggs, and it started hatching at the mining facility. I'll never forget that day. That was a fun day.
I
Well,
hope
leave it
you
to
name that
Patrick to
chicken
have-
Satoshi or something appropriate.
No, my wife named the ducks Cheese and Quackers.
That's exactly my point, Jack. That's what I was like, that's got to be, you got to have a crypto name. No,
No,
cheesy.
crypto wasn't cool back then. That wasn't how it was working. My wife literally didn't believe that I was doing anything of value at all.
Was
She
that
did
before the
not
ATM?
understand. Yes, that was before the ATM machine.
Let's be
You gotta
honest,
tell
guys.
everybody
Crypto-
the ATM story.
The
Crypto
ATM
is never
machine
going to
is
be cool.
so the
It's not
ATM
cool now.
machine
It was. We only pretended it was cool in 2021 because the crypto guys were rich. They were never cool. They were just uncool with money, and so
No,
women
man.
pretended
I
they were
went
cool.
into Bitcoin mining. I was a nerd. It was just fun. It was a way for me to do something, and it kind of grew on me. And next thing you know, you come out at the end, and it's on CNBC, and everyone's talking about it. But no, at that time it was just me. But my wife was not sure what the hell we were doing until the day we went into the mall, and I saw a Bitcoin ATM, scanned it in. And all of a sudden, it starts spitting out dollars at her, right? $20 bills. And at that time, the maximum was $900. So it's sitting there just spitting out $20 bills. And my wife is just catching them as they come out. what just happened? Like, what is going on here? And
I've
imagine,
never used one of those. What are the fees like on them?
oh, don't ever use it. It's not
Not
valuable
good.
at all. I've got
20
better
to
I
fees
didn't think
30%.
now. Yeah,
someone's making
terrible.
money off of that,
Yeah.
and it ain't us.
Terrible,
Yeah.
terrible fees. But at the time, the shock value of it coming out, like spitting out cash at my wife, she was looking at me like, okay,
That was a down payment
how
on
many
future,
Bitcoin
support
do
for
we
future
have
ventures.
again? How many Bitcoin do we have? Like, that was her next question. And every time we saw a machine at the mall, we'd stop in, get her some cash. We learned how to use it. But, that was a funny story because it's just, for me, Bitcoin was more than just a get rich quick scheme. It was a family story. Like, it was my family, my kids, my wife. We would learn it. It was a life-changing experience. Coming out and seeing that everyone's talking about it was really just dumb luck. Flat
I'll
out.
leave it to Patrick to come up with a great transition from livestock to crypto. But let's talk a little bit about Bitcoin and crypto for a few minutes before we get to our final prepper story, so we can help people along and survive and thrive
That was a
throughout
great
what's going on.
story.
But it was a great story, Patrick. But
Thank you.
I want to hear from Jack because he knows the audience well, and he talks with Mish and on their Discord. And I talk with them and Chris at Financial Preppers. We hear a lot from the people that are especially tied into stocks and bonds and looking at the traditional economy. What is their take on crypto? Do they just think it's like? Do they all hate Bitcoin? Do they not understand it? Is it ever going to be something that they utilize or adopt or even just dip their toe in? What's your take on that, Jack?
The most common thing, if you go to somebody who doesn't live in the space, they're going to tell you it's a scam, right? You hear Bitcoin. If you're uninitiated, you hear Bitcoin, you immediately think SBF, right? You immediately think the scam artist, and it's going to take years to break that. Unfortunately, I can tell you, like in nuclear power, when people found out I worked in nuclear power, they immediately thought Fukushima. They immediately thought 3 Mile Island. It takes years to break that, even though what SBF did was the most anti-Bitcoin thing. I mean, he took this decentralized, wonderful, permissionless thing, and he turned it into his personal fiefdom, and he tried to use the government to create a mandated monopoly for himself. It was the most un-Bitcoin thing imaginable, and yet because they, being the global elitists, they control the flow of information. When people hear Bitcoin now, they think Sam Bankman-Fried. Right, so that's going to be the most common thing you're going to hear from the uninitiated. The other thing you're going to hear is it's backed by nothing. It doesn't exist. And I've had this argument with a couple of people, and on my channel, a lot of my viewers are very diehard precious metal enthusiasts, as I am myself.
Amen.
Some of them are violently anti-crypto, not violently, but they're very anti-crypto, right? They repulse at the thought of it. And most of the time, as I just start asking questions. If you want to know where somebody's head is at and what's the root of their thinking, just keep asking questions, and it kind of reveals itself. And all it boils down to, the most common, at least well-informed dislikes of Bitcoin comes from the fact that it has no mass. It's massless. It doesn't physically exist anywhere. And I can understand that, especially if you're a big precious metals guys, because the main draw of precious metals, you hold it, you own it, it's yours. Private keys doesn't really register with these guys, so it's not going to make any difference. But it really boils down to because it doesn't have mass. And okay, have you heard about how the banking system works? Do you realize that, M2 money supply might be $32 trillion, but there's really only, I think $5 trillion in actual paper Federal Reserve notes in circulation? So guess what? All of your dollars that you're telling me you won't trade for Bitcoin because Bitcoin has no mass, none of your dollars have mass. Or say you have $50,000, maybe 500 of them actually have mass if you can get to the bank before everybody else during a run. So, if you just keep asking questions of people and figure out where does their objection lie, most of the time it's going to lead to because it doesn't have a physical existence. And if that's really the case, well, guess what? Then neither does the U.S. dollar.
That's a good point there.
Yeah,
I just a quick comment there, and this is a little woo, but it's I think probably more in bucket.
What bucket?
Bucket two, likely one. There's a book because it's just theoretical. There's a book called Our Mathematical Universe by Max Tegmark. And he basically, one of his core hypotheses in that book is that the universe is just a mathematical construct, right? And everything that is within it and stems from it is all due to the relationships between the different components in it. fascinating thing. Definitely way more complex and advanced than I can articulate here today. Very interesting book if you like that kind of thing. But if that's the case, and the universe is just a mathematical construct, then fundamentally everything just comes down to math. And so if the math works for something, that's all that really matters. And so if you can have a high probability um, or likelihood that the math is accurate and it is what it says it'll do and it works, then you can put a lot of confidence in what you're using. I mean, like gold, right? I think something to do with gold is that the what we consider gold is there's only one stable isotope of gold. Everything else will decay, right?
Yep.
Because the math works for that particular one. So even though it has this physical appearance that we view as gold, um, it really comes down to what is the mathematical structure underlying the thing. And so, I think that's a really fascinating thing to me, and that always gets my mind going when someone says, "Well, Bitcoin doesn't exist." Well, it's like it does, right? It's a mathematical construct, and there are things that interact with it because of how the mathematical construct exists in the world. So, I think that's fascinating.
Yeah, it's
We
kind of
add
like
a
gravity,
chapter to
right?
that book that math doesn't care about feelings.
Yeah,
I mean, you
Yeah.
made a great point that if the math works, it works, right? But so much of the problems we've discussed in this last hour or so can really be drawn down to feelings are driving everything right now. And okay, I get it. Like you shouldn't ignore feelings. I can be a sensitive guy. I'm not this cold hearted, but at the end of the day, if the math doesn't work, it does not matter how strongly you feel about it. It
hmm
doesn't work, right? If if the if the load on that bridge exceeds the strength of the bridge, I don't care how much you love that bridge, it's coming down. And
Yeah.
we don't, for some reason, we act like economics is different and finance is different. It's not. And all the things we talked about today, social entitlement programs, minimum wages, debt spending, it all comes down to we're making mathematically reckless, borderline insane decisions. I'm sorry, I just used a word that probably got you guys shadow banned again.
wait,
I'm hyper aware of this because I get myself in trouble.
wait, wait, Jeff, you could always do like a.
Yeah, beep it out or a quack or something. I don't know.
Got
We're
it.
doing these things because of feelings. Well, feelings don't change math. The numbers don't add up. And let's get a chapter in that book added that math doesn't care about your feelings.
Hey, Jack,
Yeah.
you think you could send me a list of words to avoid because I don't know what they are. I just assume that my presence will get us avoided, but Jeff assured me that we're still here 11 episodes later.
If I say it often and loudly, avoid it. That's all I can
Yeah.
tell you.
That's
The-
my
the list-
problem, though, is obviously I watch your content. So I've actually
list
said
does
and showed
change.
your content on our show a lot. So I'm surprised. I think I don't have a problem or shy away from telling people what I think.
I feel like Charles Barkley in the 90s here. Like, I never said I was a role model. That was Michael Jordan.
Yeah,
That was not
yes,
me.
exactly. I agree. I can relate to that.
Well, it's always great to hear other opinions on crypto because we're all Dylan and Patrick and I are very much crypto guys, been in it for several years.
Well,
But your
let's take
point,
that back and say, like, crypto guys, yes. But when we talk about Bitcoin, again, we separate Bitcoin from every other crypto. Bitcoin
That's
is its class and a tier of its own. Crypto on a whole nother level. Sure, I enjoy it. It's a hobby like someone enjoys basketball and baseball. There's opportunity. But to me, Bitcoin is not something else like every other crypto. It's the elite is different than every other crypto out there.
You and
And-
Gary
but-
Gensler, right? As Gary
Yeah,
Gensler
we
said,
agree.
anything
Yeah.
but
Well,
Bitcoin.
I don't
is a
know. Maybe on
security.
Ethereum, that's still out for discussion. XRP
Yeah.
looks like they might just win their lawsuit. We could talk about that, but we won't. But I don't know. That's where the guy, the nerd in me, the crypto nerd, comes out for sure.
well, I
And-
wanted to address what Jack was saying, and I'll throw it to you in a second, Dylan, because you did this page, but I'm going to point that up in a minute. But your point about like the lack of tangibility of Bitcoin, that's why we really like these economic preppers wallets. And that's what I was going to share here. Let's make sure I've got the right window open, of course. But for just under $45, you can get a tangible wallet and put your Bitcoin on it and stick it in a safe, and then you've got something that tangible that looks nice and looks luxurious, and it's ticking across the bottom here. But you can see this. Here is something that looks nice and shiny and looks like it has value, and it's got your crypto on it. And you can put it in your safe. So if someone stumbles on this in your safe at some point after you pass away, you're like, oh, that looks valuable. What is that? So that solves one of those objections. So we love to hear those objections because every time we hear an objection, it's like, okay, how do we defeat that objection and say, what is your next concern? But Dylan, you're going to share a book there. What was that?
So I want to share this because, we're talking about the differences between Bitcoin and crypto, and but this book came out. It's by Jason Lowery. It's called Soft War. It's his MIT thesis. So it's been getting a lot of publicity recently, and I've started reading it. But he makes a comment, and he kind of takes a stance that Bitcoin as the asset and the network it's a form of defense, and it's a strategic. What are the words? It'd be strategic for the United States or any country to understand it and utilize it correctly. And if they don't, there's some severe trade-offs that they give up or vulnerabilities that can be exploited by other countries. And one thing he comments is that just because Bitcoin was called a coin, because he's trying to look at it from a different perspective, and whether he's right or not, only time will tell. But just because someone commented and called Bitcoin a coin in the beginning, just like they called mining, Bitcoin mining, doesn't necessarily make it a coin, doesn't necessarily make it only something that people that understand finance can comment on or use.
And I promise you, there's nothing like mining about it, like gold or silver. I can tell you that for sure.
Exactly. And I think it's the saying is like, assuming that you have to be like a financial expert to comment on Bitcoin because it was called a coin is the same as assuming that you have to be a meteorologist to comment on cloud services offered by Amazon because they're called clouds, right? So just because it has a name. And so it's a really fascinating book. I just wanted to share that with you guys as something interesting to look into.
Hey, we should make that into some kind of short. That was very sexishly said.
Yeah, definitely come back to that one. But guys, we've been talking for an hour, and I think our audience is really going to enjoy this. Jack, I really want to thank you again. We'll share that one more time. But before we close, I think Patrick, you had one prepping item to help people that they're prepared for what could possibly be coming. You want to talk about that?
One of my favorite things I do on our show is I always like to bring up something of value that you could kind of look at for your ideas. And when you're planning your kind of game plan for what you would do should an earthquake come or should fires happen or should floods occur, I like looking at generators. One of these generators at Costco, I think right now they're on sale. Actually, the tri-fuel generators are I think like $7.99 or $6.99 right now, but they will run on propane and natural gas and gasoline. So if you have something like this, you could power your freezers, you could power your refrigerators by running it just twice a day for 1 hour or just 2 hours total per day. So something like this is something that could really benefit you even in a cul-de-sac. Imagine being a neighborhood that has one of these in the middle of the cul-de-sac. And as long as everyone has a gallon of propane, they can just bring their own propane and use it. It doesn't matter, right? So just think about one thing that you could do to be prepared, not scared.
Hey, that's fantastic too, because one of the big vulnerabilities with a lot of people who have backup generators is the shelf life of gasoline. Like I used to watch The Walking Dead all the time, and I was like, oh, look, here's more of that 2010 gas that still works somehow. Like 11 years later and cars still work somehow, even though all the oil refineries have been shut down for 11 years. Gasoline, 6 months tops out of shelf life, especially with the ethanol in it. Well, propane has no shelf life. So a generator like that can run on propane, you can actually store long-term fuel now, right?
Yeah, propane's a huge resource I really recommend for the community to accumulate because it's something you can use for cooking. You can use it, actually have propane coolers and propane refrigerators. As you guys saw a couple weeks ago, I talked about the little mini propane Mr. Heater that you can use to heat your home, really efficient for propane. So propane's a great resource. Always pick up the propane tanks that you see at garage sales because you could take them to Home Depot or any grocery store and swap it out for a new one for $15.
Don't store it in your house. Don't store it in your basement. Don't store it in your garage. All right. Firefighter Jack does not want to come to your burning house that's full of propane.
Hey, can you just tell us where to store it instead of telling us
store it in a shed, store it in an outboard, store it well away from where you sleep. That's what
we're good with that for sure. It's outside.
If it goes boom, where do you not want it to go boom?
It go boom. It go boom big.
Yeah. But your point, Jack, about the gas, there is clear gas that you can buy that doesn't have the ethanol in it. So that does last longer. And there's also additives you can put to gas to extend the life. I know I've had some farming people and some homesteading people that have mentioned that to me in the past as well. I think I even did a video of that in Myrtle Beach last year. It's if you search
we
my
don't want
channel,
to spread a myth, though. The myth is that it lasts a long time. Long is relative. Gasoline, whether it has ethanol or not, won't last a whole lot longer than 6 months to a year. And that's only if you have sealed it off from oxygen. So it needs to be in a container that has no oxygen in it. So these are things that you got to think about. Just because it's clear gas doesn't mean it's going to last for a long time.
Yeah, and this ethanol that we're putting in gas now, that's only made things worse. So, anybody who's tried to start a weed whacker in the last 20 years knows what I'm talking about. Nothing.
I have not.
Carburetors just gum up with the bad gas. So.
No, I have a Steve.
So, well, guys, this has been a fantastic episode. Jack, I want to let everybody know how to follow you one more time. Jack is at JG_Nuke on Twitter. Also on YouTube, it's Nobody Special Finance. That's the wrong one. It's this one over here. Nope, it's not that one there. There's Jack.
Oh, much
there we
better
go.
looking
I
than
can
all
finally
these
close
guys.
it right there. There we go. So there's Jack at Nobody Special Finance. Jack, any parting words for the viewers or things you want to just leave our viewers with, like how to be prepared as the craziness is continuing to ensue?
I'm reading a book right now called Atomic Habits. The name of the author escapes me at the moment. Fantastic read. Don't let the size of the problem scare you away from doing anything. Change happens incrementally. Seek to make a series of minor 1% improvements in your preparedness or your financial situation. Every day, set out, say, I am going to make things 1% better today or a fraction of a percent better today. Do that every day. In aggregate, you will get to where you want to be. It happens incrementally in small amounts. It doesn't all happen all at once. You're not going to pile into one thing and do really well, and now you're secure and you're safe. So it's a long game, not a sprint.
Excellent advice, and thank you again, Jack. Dylan, last words.
I'll share another book since I've been sharing a lot of books today called Extreme Ownership by Jocko Willenick. And I think it fits nicely with Patrick showing that generator. And it just reminded me of this book. This one's by Grant Cardone. I don't know if it was in this book or one of his other ones. But basically he says, like, when you embody the principle of extreme ownership, you take ownership for everything and anything that happens to you in your life, right? And he's like, look, if I can't do work from my house because the power goes out because there was a storm, it's my fault because I didn't prepare ahead and have a generator, right? You can always blame someone else or something else if you have that mindset. But if you have the mindset of I'm going to take ownership for my life and the outcomes that I want, and you start today doing that, then whatever situation arises, right, you have a mindset to solve that problem versus be a victim of that problem. So the book is called Extreme Ownership, and I try to embody that in your life, and we try to do that to here, each one of us, and then for our viewers as well.
Dylan always having the excellent literary references there. Patrick, parting thoughts.
No, I'm actually just impressed. I told you, Jack, you were going to like him. I saw that you made that comment. I told you he's our guy.
Yeah,
That's all I
that
have to
Jocko
say.
Willink thing. I saw the TED Talk that inspired that book. Amazing story. How every single guy in that team walked into that debriefing and said it was my fault. Every single one of them. Fantastic story.
Wow.
Good reference.
Wow. So, guys, this has been a great episode. Again, thank you, Jack. We'd love to have you on again. It's been a fantastic episode. You guys will be seeing us all over this weekend. Thank you again. And I want to remind everyone to be prepared and not scared. Take care.